Hello, everybody, and welcome to this week's podcast for October 10th, 2024, coming out on October 11th. Hope everyone is doing well. My name is Miles Clark. I'm joined here by friend and colleague, not brother, David Clark. Good to see you in the office again. Been a bit.
I'm glad to be back on the podcast, back in the office. And it's always hilarious the amount of times that when even on client calls that we have to interject and be like, "No, we're not brothers."
I know it's going to be a lot of fun in Nashville when you and I present next week
And people
in
meet
front
us
of
face to
150
face.
people that are like, I don't think that you, for those of you who are watching on YouTube, probably can tell David and I don't look the same, right?
Nope.
So we're not brothers, but nice to be with you here this week, talking about markets, talking about earnings season, talking about hodgepodge of stuff that's going on, that's been changing, and things like that. So where do you want to start? Performance?
Yeah, I mean, performance-wise, it's been a pretty interesting week. Sort of last week where we ended the quarter, it was all about China and emerging markets, and then transitioning on over into this week, slightly different story because we've kind of seen at least the beginning of this week that emerging markets, along with even some commodities, pull back a little bit. But week over week on a 1 week roll, we generally have seen US equities in positive territory. Like we said, most of sort of the international commodity space pulled back, generally speaking. But crude oil was, it's weird calling it the bright spot. Maybe we call it the black spot, but more in positive
Right.
connotation. But, crude was really probably sort of the notable highlight to cap off the end of last week, at least some of the breakouts that we were watching.
Yeah, interestingly enough, you saw a retreat a little bit for gold, maybe call
Mhm.
that the bright spot, right? The shiny spot, whatever. And then you saw crude oil advance. Now, crude oil is going to have different things in play, right? And tensions in the Middle East, that plays a part. Seasonality. I know I put together a piece in the report yesterday that talks about the historical tendencies for crude oil. The fourth quarter, which is where we sit right now, is typically not that great. It falls on average by about 3.5%. Put that in perspective, that's about 5% worse than the next worst quarter.
Mhm.
Um, Hopefully that makes sense. But
Check out the article on Wednesday.
yes,
That
yeah. So
report.
we got some seasonal headwinds in store for crude. That makes a little
Mhm.
bit of sense as well, right? People are doing less traveling. There's a lot less maybe demand when we're flying all over to and from the beaches and everything like that all over the place. Gets a little bit colder, right? So heating and things like that, there's pickup in demand there. But seasonality or seasonally, we're maybe in a bad spot for crude. And we've seen that so far this year. It's underperforming where it typically is from a year-to-date
Mhm.
perspective. Energy has fallen down to the bottom of our sector rankings. There's a lot to unpack there, but I'll
Right.
stop there.
Well, and I mean, even then, the story that I feel like we've been talking about when it comes to crude oil, no matter the news story, is in reality it continues to be range bound.
Yes,
And that's really from our perspective what matters most
right.
is it even showing upside potential. We've basically been in an environment where for almost, I would say, a year and a half now, where it's trades have been offered. There's been quite a few trades that have probably worked out for folks, but when you're comparing it to long-term investment opportunities elsewhere in other asset classes, it's kind of just been that, just short-term trades
Yeah, I
going
got a
away.
question for you actually on that because I'm curious. We work together every single day, so I might as well ask you your philosophy on this type of stuff. When you're looking at PNF charts and you're looking for, or you identify these big ranges, maybe not for something like crude, which isn't as tradable, let's
Mhm.
say, but let's just say a stock. We say an upside target of $100 and a downside kind of bottom of that range is at 90.
Mhm.
Do you focus on that range more, or do you focus on other aspects like that technical attribute score? Which one? And the answer can't be both. Let's start it there. Answer can't be both. Which one do you focus on?
I mean, ultimately, with me, in many cases, it's probably going to come down to what the chart's doing. I
All
mean,
right.
that's because the ultimate determinant of all these things, whether it be the technical attribute or any of that, is based off of what's happening on the chart, just that price chart. So, I mean, really, that's probably going to be my last determinant is really sort of looking at the price chart. Because, I mean, yeah, you could have a 4 and 5 for fiver that sits there and bounces around between a certain price range. And there may be opportunities sort of if we're going on tangents that's fine. But
Right.
generally speaking, if I'm just looking at a chart that I'm saying, that nice stair stepping that we love to see on a point and figure chart versus something that's range bound, and maybe I'm looking at a 3 versus a 5, I'm probably going to that stair stepping chart 3 for 5, or rather than going with the perfect 5 attribute that's been range bound. But
Nice perspective. Yeah.
it's sort of, and that's where it comes back to, is it's about taking a step back and realizing what your client's perspective is, for advisors out there. Because I mean, they may not be in a trading aspect. It may be an idea that, in some cases, range bound may be an opportunity for them to add more to a stock that they want to hold long term. So it's sort of in the aspect of talking about short term, that's the way I think of it.
Right.
I think in some cases, I would in most cases, I would probably end up asking follow-up questions,
Right,
but
of
you said
course,
I
there's
couldn't pick
always both,
both.
yeah. Well, I think that opens up a decent opportunity to talk about the fact that charts are always telling you something. For instance, we talk about participation indicators a lot when it comes to this, right? Like
Mhm.
when some people will say, well, hey, Miles, like there's not a lot of stocks on buy signals right now. Or hey, maybe a stock is super range bound, right? Like, okay, that's what the chart is telling you. We are defined in this range right now. If we see a breakdown out of that range, that's significant.
Mhm.
If we fall down to that range again and then reverse back up, that's significant, right? So the
Mhm.
chart is always telling you something. It's just like finding what it's telling you, right? Like
Uh,
putting your ear in the right direction so
one of
you
the
can hear
interesting
its sweet
things that I
whispers.
one of the interesting things I remember going back to my intern days is TD would always talk about the point and figure chart telling the story of supply and demand.
Right.
I mean, which is where we come in and have our conversations about how the point and figure charting works. But I mean, in its essence, that's what it's doing. It's identifying, are there buyers, are there sellers, who's
Right.
willing to step in,
Right.
And that's the one of the beautiful parts of it is the fact that it has its simplicity rooted in that. But we're getting anecdotal.
Yeah, I know. We're just going off. I want to focus on the international stuff because last time Ian and I briefly mentioned it. Of course, China been a main catalyst for that upside action. We've seen that pullback. It's a logical place for a pullback.
Mhm.
You would pretty much hope so, right? Like FXI, some other representatives up like 40-50% over the
Right.
course of
And in
two
some of
weeks.
those like overbought, oversold readings, I remember end of
Laughable.
last week, FXI was near 200%
Yeah,
north of that. I mean, for an ETF or a mutual fund to get in excess of 100% is pretty significant in
right.
terms of your overbought, oversold rating, because that means you're trading way off your or way above your 50-day moving average. In this case, FXI was almost like mountaintop above its 50-day moving average
Yeah, and this
aspect in terms of extension.
Yeah, and this gives us a really unique opportunity to say, hey, for China and for other, well, China specifically, but maybe emerging markets in general too, this is where the rubber meets the road. Yes, you can get some massive price appreciation, which in many cases has led to nice relative strength improvements. But now it's can we sustain? I'm not saying we're expecting or expecting China or hoping that China goes up another 40% from here. That's certainly
Or
not
that even the bottom falls out from
right,
here.
right,
Like it's
exactly.
just sort of
It's
finally prove something.
yes, can we stay where we are in this general area? Can we just avoid this is where the bar is. Can we avoid falling back down to to
Right.
where we were
The
just a
the
couple weeks
prototypical
ago?
experience that many feel with China.
Yes,
Honestly, it would be out of norm if it just consolidated.
right.
Like that would honestly be one of the things that would be interesting right now for the space is consolidation for China. At least not consolidation at lows. You know, feels like a little bit almost out of norm for it,
Yeah, and
in
I
a
think the
way.
fundamental backdrop is there too, right? Like you have this unveiling of
Mhm.
stimulus, right? And now, China is different. It's a whole different beast, but you would expect perhaps maybe for the markets to maybe digest that stimulus, kind of let everything
Yeah.
kind of go. So it feels like there's a fundamental backdrop. We're not fundamental analysts. Let's make sure that's clear. But it feels like there's a fundamental backdrop for consolidation or maybe a wait and see or normalization to occur through time rather than through price. But from a technical perspective, that's what we're watching. Can we avoid dropping like a rock?
Right. Yeah. And in truth, sort of almost build a plateau, if you will, before we look to go ahead and move on to the next base camp.
Yeah.
But it's been, I mean, it even with some of that pullback, what's interesting is like looking on EEM's chart, you still haven't seen it reverse down just yet. I mean, it's on a cusp of potentially reversing back. And generally speaking, while China was sort of the big factor in watching EEM and sort of international equities take a step back. I mean, on some charts, we sort of saw some action towards the end of last week with that domestic equities taking a brief step back and then sort of taking back off this week. So it's been another little bit of a with both spaces. It's like one part of the week's positive, next part of the week's
Yeah.
negative, sort of just this flip flop back and forth with them.
We'll talk about areas that or catalysts for moving up and down. Earnings is one of those, right? And this week really starts earnings season, maybe in earnest. Of course, things really get, yeah, there you go. Earnings in earnest. Make that the title of the podcast.
Yeah.
But talking about fundamental factors that can influence price, that's going to influence technical factors, right? So earnings can obviously impact or kind of lift open the curtain, if you will, or swing open the curtain so we can see what's really going on. And that's getting started. What with tomorrow, or it's already gotten started,
Well,
I guess.
today already has gotten started, at least with two in particular. Delta was sort of the main one that many were likely watching, and we also saw Domino's report as well. And pre-market trading, there was a little bit of a reaction to Delta because they did technically miss. But I mean, and we were talking about this on before we started the podcast. Seems a sort of discretionary space right now. You're seeing a lot of caution, but it's sort of the extent to of how much caution are you taking? Are you sort of still giving some level of affirmation towards guidance from the fundamental perspective, and that's really where you're getting a lot of these reactions. We got a pretty decent reaction starting out of the week for a lot of these airlines because a lot of them were getting upward price revisions.
Right.
And maybe that's played into what's helped out Delta's price because we haven't seen it really reverse down or have much chart action after reversing back up into X's, I believe it's on Tuesday. So currently still sitting in X's at 51 there at the top of the trading band. But I mean, this is another one of those where you look and you find some overhead resistance and what's been one stock that's shown some improvement. But
Yeah, we talk about Delta and some of the like kind of that being a blue blood of the airline space. Another spot where there's been standouts from the blue bloods has been the financials group. Now we have seen financials broadly pick up, so maybe this isn't as top heavy as airlines are, but JP Morgan starting off tomorrow, you get some of the larger banks reporting and things like that earlier next week as well. So we get things kind of picking up relatively soon. JP Morgan is tomorrow, right?
JP Morgan's tomorrow.
Tomorrow as in Friday, the day
Friday,
you're listening to this.
Correct. So you'll have JP Morgan on the 11th, along with I think it's Bank of New York Mellon, then Wells Fargo, and then next week I think you get Citigroup and Bank of America.
Right.
Are sort of the two big ones. You also get United Airlines next week, early next week as well. So
okay, yeah,
there's a few that we're kind of getting right into this. So I'm sure in many ways we may have a few more stocks to talk about next week as far as
if we do a podcast next week,
Yeah.
maybe out of Nashville we won't be able to get to. We'll maybe talk about that at the end. One spot within financials that I'm personally watching is the small caps as we get them, right? I know as they kind of they trickle in, but of course, small caps, they've been a spot where we've been begging for participation. They've improved quite a lot over the course of the third quarter. But of course, you look back to maybe 2023 and issues with rates and inflation and things like that. Small cap banks were getting quite literally hammered. So they were going out of business, right? So if you get that relief now that we're seeing some rate cuts, what impact is that having on small cap banks, right? Regional banks from there. So that's one spot that I'm personally watching, just as a sign of health within the sector, and just as a source of participation outside of those larger names within the space as well.
Well, and that's where I was getting ready to say. I mean, so much of that small cap space is financials, tech, healthcare. I mean, namely, whenever you look under the hood of a lot of those small cap indices, it's hard to find many that aren't really almost a third financials in some aspect. Because I mean,
Right.
it's a pretty heavy weight. So to your point, that's almost, can we see sort of that building for small caps coming from really improvement out of the community banks, or and in many ways that sort of feels like a lot of the calls that we've been getting is, where else can we look? You
Right.
know, it's no longer feeling like fielding calls about Nvidia, Microsoft, and Tesla and all
They
the
still come through.
magnificent. They do, but
Yeah.
now it's very much the conversation of, all right, I'm looking for other options, other
Right.
alternatives, looking for different stocks, looking in even different sectors now. I mean, so
And that's going to be an ultimate tale. I feel like I talk about this a lot on podcasts and with clients and things, but when you have sectors, I'll just reiterate it. When you have sectors outside of tech, outside of those big seven names, that's a tailwind for momentum. That's a tailwind for markets in general, and then by proxy momentum, which can pick up on other areas of strength within markets as they emerge. So no longer is momentum focused on just overweighting technology at
right.
40% versus 37% for the broad market, right? Like it can now go look out and say, hey, I like utilities right now, right?
Mhm.
Like we've seen utility strength. Hey, I like financials right now. I like industrials right now. There's good spots that are improving. There's specific spots of healthcare that look good, right? I mean, you can make an
Mhm.
argument within every sector, there's going to be something,
There's a
but
diamond in the rough there.
yeah, it's definitely much different than where we probably stood a year ago, in 2023, right?
Feels, yeah, no, for sure. I mean, looking today versus then, at least it feels like we're not pulling up the same four charts.
Yeah, I know. Yeah, like we were talking about, but I remember doing those podcasts back then, and you were like, "What are we gonna talk about, man?" And you would, or whoever was across there, like,
It's hard to avoid
Nvidia,
the elephants in the room. This is what
it's
people
like
are talking
you
about.
look at the charts, and you're like, "Nvidia's up another 8% this week." Like, do you
Yeah,
think they
so
want to
is the
hear about
market.
that?
Yes, maybe.
I don't think they do, but like, what are we gonna talk about,
Well,
right?
but to your point, I mean, not only is this good for momentum, but it's better for the market, generally
Yeah.
speaking. I mean, this is where you allow for that differentiation away from your core index that gives you the chance to say, okay, if I can continue to see improvement here, then that's when my outperformance may occur. Because I mean, the more potential or increased participation that you're getting in terms of relative outperformance from other sectors or other individual stocks, I mean, just the better it allows you to position yourself in those,
And then
because it
even
gives
as
you
a
more options.
Yes, and like that, and off that point, and then we can wrap up. But off that point, if you're a financial advisor too, you have the capability. You don't just have to go to your client now and say,
Mhm.
hey, we're just in the market, we're just in the core of the market, right? The
Right.
core of the market's still really strong. We are definitely not saying
Yeah.
that it's not, right? The core of the market's still really strong. But you as an advisor now can go to your client and say, hey, there are some areas outside of the core that I really like. I'm kind of jazzed to tell you about them,
Mhm.
right? And so that is a good way to differentiate yourself from what clients can just go do on their own, just buy SPY, right? Like
Right.
anybody can do that. But to add in extra stuff on top of that, the market's giving you some opportunities to do so now.
Appears to be the case.
Appears to be the case. All right. Anything else in terms of podcasts next week? We're not sure about our regularly scheduled. I know we got a bunch of traveling and conference out in Nashville. So
Yep. Catapult
hopefully
will be in Nashville
we'll
next
see you
week.
there.
We look
Yeah.
forward to seeing everyone out there for sure.
But we'll see about podcasts next week. I don't know. No
I would
promises.
probably say doubtful
Yeah.
with us being out there. So maybe stay tuned for the following week, that following
We'll
Friday.
make it extra good to make it up to you.
Yeah.
All right. That'll do it for us. Everyone have a good week, a safe week, and we'll chat again in a bit. See ya.